The founder and CEO of ARK Invest, Cathie Wood, has made waves in the finance community with her audacious and progressive approach to investing. Her company's ownership in Tesla is unquestionably one of her most well-known investments to date. This is a noteworthy investment due to its size as well as the conviction and insight that went into it. Even though many on Wall Street were pessimistic about Tesla's possibilities, she has been a strong supporter of the company's potential for a number of years. However, even investment graders can make mistakes from time to time, and in this case, Wood seems to have misjudged Tesla and had to revise her prognosis to a more optimistic one. We discuss Wood's opinions on Tesla's market share, battery costs, and her continued optimism for the company's future in this video, but make sure to use the like and subscribe buttons before we head there. Cathie Wood, the founder, is a well-known name in the financial industry with a focus on disruptive innovation. Despite significant gains in the early stages of the pandemic due to the rise in popular stocks like Tesla, a catastrophic sell-off in 2024 erased those gains. At about $487 million, Tesla is currently the fifth largest asset in Wood's investment company ARK. In spite of the negative macroeconomic climate and high interest rates that have caused the market to decline overall, Wood has maintained his bullish outlook throughout the downturn, projecting that the price of a single Tesla share will reach $1,500 during the next 5 years. Wood's $487 million Tesla investment is primarily concentrated in its flagship ETF, which has added over 300,000 Tesla shares to its portfolio in the past month. Even though high interest rates and an unfavorable macroeconomic climate have caused the market as a whole to decline, Wood has stayed optimistic throughout the downturn and accurately predicted the price of Tesla shares last month in an interview. Within the following 5 years, shareholder Cathie Wood of Tesla estimated that the company's stock price will reach $1,500. It's true, she said in a Barron's interview, that there are people who don't buy his cars now, alluding to the recent price reductions on Tesla models. But if he does what we think he's going to do on the cost side, she added, there are a lot of people who will use economics as a guide. And I think there are a lot more of those people than there are of the naysayers around Twitter. The launch of Tesla competitive goods was one of ARK Invest's main objectives. ARK Invest had forecast that Tesla's 17% market share of electric cars globally, including China, would drop to a lower figure. However, the company's market share rose to 18%. When it comes to range and other critical metrics for electric vehicles, Wood said, Tesla is the Mercedes. He also mentioned that Tesla's battery cost is declining 3 to 4 years ahead of any other automaker. So every other auto manufacturer will have to sell their cars at a loss to compete with Tesla, she stated. In response to a question about her thoughts on Tesla after 5 years, Wood stated that the firm has an edge over rivals if cars are compared based on their power and range rather than their brands. Then, unless automakers want to lose money on the our cars, most will not be able to keep up with or reach Tesla's combination. She did concede, though, that Tesla's power and range outperform those of other well-known automakers, including BMW and Volkswagen, which have made significant advancements recently. Star investor Cathie Wood responded to a tweet from the director of ARK Invest on January 7th, stating that while the EV possibility is great on its own, branding is a different story. She thinks buyers would start to switch from gas to electric automobiles and look at the specifications of the various models, even if other automakers have brands and many people have brand loyalty. In mid-April 2026, ARK Invest published their updated open-source Tesla value model. As long as ARK keeps buying Tesla stock, investors may expect the model to be worth $460 a share. It's crucial to keep in mind that the Tesla model was created before the company's August 3-1 stock split. Cathie Wood is still really optimistic about Tesla in spite of this. Tesla is the leader among asset managers in terms of holders. Cathie Wood bought the ARK Innovation ETF several times in January, and it currently ranks third in the industry. Cathie Wood has kept buying more Tesla shares despite the fact that the company's stock has dropped 58% in the last year as a result of worries over supply and demand. At the close of trading on January 18th, ARK funds bought 49,983 Tesla shares, worth at $6.4 million. This was in line with a CNBC webinar that predicted significant gains for the company. Just from electric vehicles, there could be almost a 5-fold increase in the stock during the next 5 years, Wood stated. And if you have any faith in driverless vehicles, the following 5 years will see a closer to 13-fold increase. Thus, our level of optimism regarding Tesla is at an all-time high. Wood concurs that the corporation made a smart move in cutting prices recently. She stated that Tesla will have an aggressive price strategy and that other automakers will suffer greatly from margin and profitability as a result of having to follow Tesla's price declines. Tesla can afford to do this because it has the lowest cost structure and is innovating the most aggressively. However, Musk's Twitter distraction, as some have called it, in reference to his acquisition of Twitter and his contentious comments, continues to raise serious concerns. It was recently disclosed to Yahoo Finance by Wedbush analyst Dan Ives that Musk is the only one who could put out the fire alarm that he started in Tesla shares, Musk's most recent evidence in a lawsuit brought by Tesla shareholders. Follows the disastrous events on Twitter. He needs to defend his stance. Elon Musk, the CEO of Tesla, stated that, in light of the current situation, when the company's stock price looks to have increased, he found it preposterous that his tweets might have an impact on it. He did, however, tweet once that he believed the stock price was too high and the price increased. That might be seen by casual observers as a admission that his tweets have an impact on stock prices, but Musk insisted that a correlation could only be shown if the price of the stock truly dropped after initially asserting that it was too high. It's not like people would automatically listen to or act on anything I tweeted, he stated. The CEO then clarified that he did not believe there was a causal relationship between his tweets and the price of Tesla stock, based only on its EV business. ARK's 2026 price forecast for Tesla shares would be about $500 per share, or 4 times its current valuation. The revised projection has taken into account the 3-for-1 stock split that took effect on August 25, 2022. Furthermore, in mid-April 2022, Tasha Keeney, an analyst at ARK, disclosed that the business would be eliminating ride-sharing and autonomous cars from its valuation process. The business claims that these real factors will determine nearly 60% of Tesla's worth over the next 5 years. She also stated that the $500 per share expected stock price represents a 4-fold increase over the current stock price. However, even if it seems sense that ARK Invest does not include ride-sharing or full FSD, although it makes sense that ARK Invest does not factor ride-sharing or complete FSD into their valuation, full FSD might be possible in the near future, which would result in a massive increase in the price of Tesla's shares. With Tesla's full self-driving FSD technology, the car can drive itself in some circumstances, but a safety feature keeps drivers from giving up all control. Elon Musk, the CEO, claims that drivers will soon be able to turn off the safety feature. The feature in question is the steering wheel nag, which alerts the driver to keep their hands on the steering wheel at all times. The technology demands the driver to move the wheel frequently to make sure they are paying attention if they don't. A recent tweet from a user proposed that people who have driven more than 10,000 miles on the FSD beta should have the ability to disable the steering wheel nag. Elon Musk concurred, stating that an update that will likely include this feature will be released in February. Therefore, even ARK's optimistic $500 price per share estimate may be quite conservative, and since complete FSD will soon be implemented, it may be impossible to forecast with absolute certainty how high Tesla stock will rise. Subscribe to our channel for more predictions on Tesla stocks. Please hit the like and subscribe buttons if you enjoyed this video. See you in the upcoming video, I hope.